information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of indeterminate length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 4th day of November 2015. Let's take a quick look at the numbers. Fed Chair Yellen testifying today, and she said, how did she put it? There's a live chance. Well, you know, that's what she said. She said there's a live chance, correct me if I'm wrong, that we could see a rate hike next month. So we'll see. The markets have responded in an interesting fashion, as markets will do. But let me just give you the numbers. These are, again, the cash markets, not the E-mini futures. S&P 500 is down 6 points. Dow Jones Industrials are down 35 points. NASDAQ is down 6.5. Now, I don't know if you guys are aware, and I don't know if this is true with your broker, but with our broker, the intraday margins on the NASDAQ jumped from 500, where they've been for the longest time, up to 2,500. For as long as I can remember, the four horsemen, S&P, Dow, Russell, NASDAQ, have been 500 intraday margins. It's sort of a drawing card for a brokerage firm to be able to offer those intraday rates. So the NASDAQ has seen some volatility, but I mean, they took that thing up to the levels of gold and crude oil. We'll check on it here in a moment. It's 2,700. We'll have a look at it. Let's get through the numbers. The NASDAQ is down 6.5 points. The Russell 2000 is down 4. Crude oil, we did have inventories today. Oil is off $1.28. Gold is down $1.30. So even though gold is down, at least it's not down as much. At least it's down single digits today. How about that? All right. Now, Asian markets, where yesterday they were brightly painted red, today they're all green. The Nikkei is up 243. That's over 1%. Shanghai up 142. I don't think that's correct. That's a 4% change. All right. I don't think that's correct. Hang Seng is up 485. That's 2%. That one I'll go along with. European markets, the DAX down 105. That's almost 1%. FTSE is up 29 points. And that's 0.5%. And the CAC 40 is up 12. So, relatively quiet. Nothing really rocking the boat. We had Draghi speak, according to my economic calendar. Draghi spoke yesterday at 2 p.m. Eastern, but then he spoke again this morning at 4 a.m. I'm not sure what he said, but I do know that I had a look at the euro earlier, and it was not pretty. What does not pretty look like? I'll show you. Let me find it. Well, I mean, I guess it looks pretty if you're short the euro. Okay. That kind of not pretty. Let me just shrink this whole thing up a little bit. Get it in perspective here. Okay. So yesterday, off of our alert, at one point there were seven ticks in that first hour, and then there was 48 ticks, and then it just kept falling, and so I stopped calculating it. Okay. Now, November 1st, Sunday night. Sunday night, we had a gap higher open, and then we just kind of moved sideways, and this is where it all started. Yesterday morning, that would be Tuesday morning, 2 a.m. Eastern. Was it 2 a.m. or was it the European Open? I still haven't had a chance to go through every chart. UTC 5, so that is correct. Okay. All right. It's a little peak right here, and then comes the drop, and we've gone from, well, this alert 10990, let's just call it 990. Here's my calculator. It's in hiding. There it is. So maybe it's not as bad as all that. 990 minus 865. 990 minus 865. Okay. That's 125 pips. Guess that's not so tragic. Times 1250. Well, it's $1,500 per contract from here to here. And while I've got it on this page, I guess I'll just go ahead and look at where we view email. There we go. Last night on the euro, we suggested being short 109.60. 109.60. Right there. We got the alerts out relatively early last night, all things considered, 7:15 Eastern, so that's 19:15, and so this happened this is the 1900 hour. This is when the alerts came out. 2000 is when it triggered. Now the first drop took us down to 57. From 960 down to a low, of 44. Let me just go ahead and write that on there. $1.0960. $1.096. All right, if it had dropped all the way to 40, that would have been 20 ticks or pips at $12.50 each. But it didn't drop 20 there, it dropped 16. Okay, fair enough. How many do we need just to be done for the day? If that's what you're trading is the euro, you need 8. So we certainly got 8. Important prices, important areas are almost always tested, and so it came back and it did indeed test, and pretty substantial drop. Okay, well, let's not get ahead of ourselves. We'll go through the Concierge Trade Alerts a little bit later. Today we'll go to Michael, as we always do, for a recap of everything that happened in the live trading room. We will then go to our good word for the day, and then we'll talk to David from Page Trader. And then, today being Wednesday, my co-host Jim White Bar Cox should be joining me at exactly 1:45 p.m. Eastern. The S&P that I have up on the screen, I guess I could talk about that for a second. Yesterday we had an alert that ran 7 points to the upside. In the recap video last night, I did get a chance to do a full-blown recap video last night. We talked about this here and the potential for this being a stop out. Okay? We only risk 8 ticks if you're trading the 2420 blueprint. So you get stopped out for 8 ticks. But then this move up to last week's zone, right? We're still showing last week's zones to the public. Partners have the new zones as of this past Monday morning. So you get stopped out for 8, and then when we trigger again, we make a run for 28. So any day that I can risk 8 and make 28, I'm a happy camper. Now, here's the deal. Just because you get stopped out for 8 doesn't mean you're going to get 28. Okay? That's just what the market made available. When you have a zone or even an old zone from the previous week overhead, you can often figure that's going to be a good stopping point for the market. At least a point where it will pause, reflect, consolidate, and make a decision. Is it going to attempt to move higher? Or is it going to go seek out that zone below? And with Yellen and Draghi talking, we got a lot of indecision here. On the Sunday night Globex Open, we opened in a zone and then traded right down to a zone, last week's zone. The zone that we were using Friday afternoon when the markets closed. And then zone, consolidation, zone, consolidation, and then leg, retrace, leg. Now this sideways waddle, we're going to see what comes out of that. Last night we had an alert to be long 2105, and the first push was 3 3/4 points. Important prices, important areas are tested. We had a push of 3 1/4 points, then a push of 4 3/4 points, and then on the downside, 2096, the first push was 2.5 points. Okay, and it's still trying to make up its mind what it really wants to do. So that's what we're going to do today. One thing I'll mention real quick before Michael comes in. One of the Affordable Care Acts, and this is something really under my skin because I got my notice in the mail the other day, and it's still going to cost me this year $18,000 before I can get a free Band-Aid. Now, in the 30-plus years that my wife and I have been married, we've been blessed with good health. We're very thankful for that. I don't believe we've spent that much on medical care. Again, we've been very blessed, and we're very thankful for that. But now I'm stuck paying this every year. I mean, because of the insurance, I can't afford to go to a doctor. I mean, is that a dichotomy, or what is that? It's wrong. One of the Affordable Care Act's that's not the story. The story is one of the Affordable Care Act's biggest success stories since its implementation came in an unexpected place. That would be in Kentucky, the deep red southern state that has drifted further and further away from the policies of national Democrats and President Barack Obama. The Bluegrass State's Democratic governor, Steve Beshear, embraced the law colloquially known as Obamacare, though he wouldn't dare call it that. The state set up an exchange to call Connect, that's K-Y-N-E-C-T, very clever, that thrived in 2013 as the federal government's website was mired in disaster. And Kentucky expanded the federal Medicaid program, signing up more than 375,000 people over the first year of the expansion. One study found that the expansion could inject as much as $30 billion into the state's economy through 2021. Now, this would come in the forms of tens of thousands of new jobs. But most of Obamacare's success in the state is under significant threat after Republican Matt Bevin won Tuesday night's election for the governorship. Bevin's surprisingly dominant win served as at least an implicit rebuke of the law in the state, and it cemented the trend of southern states' continued shift to align more with the policies of the National Republican Party. Just Tuesday, Beshear was touting Obamacare as a political winner in the state. But Bevin, a polarizing figure, even among Republicans after his primary challenge to Senate Majority Leader Mitch McConnell, ran an unabashedly conservative campaign. At the heart of it was a promise to rip up every last shred of Obamacare that had entered Kentucky's borders. Strong talk. Attorney General Jack Conway, the Democratic gubernatorial candidate, said he would continue to implement the law in the same manner as Beshear. Overall, Kentucky's uninsured rate has fallen by more than 11 percentage points in the past 2 years. This is according to a Gallup poll. It's the largest drop in the United States next to Arkansas. It's unclear what happens next to the approximately 500,000 people who gained insurance coverage through either the private Connect exchange or the Medicaid expansion. Bevin has been firm on his vow to get rid of the state exchange, which would leave the federal government running that operation. He's been less clear on whether he will try to undo the state's Medicaid expansion. Earlier this year and over the summer, he promised to get rid of the Medicaid expansion, saying Kentuckians would simply be ineligible to renew their coverage under his administration. When you re-enroll, you may or may not have access to Medicaid going forward. Bevin said in an interview with Politico. People are not on it for extended periods of time. It's not meant to be a lifestyle. It really isn't. The point of it is to provide for those who truly have a need. But Bevin seemingly hedged on the stance later in the campaign, suggesting he would follow the example of other Republican governors who had worked with the federal government on modified versions of expansion. Larry Levitt of the Kaiser Family Foundation said the fate of the state exchange was less important to the overall health of the law than whether Medicaid expansion continued even in modified form. He added that while ending Kynect wouldn't matter too much in practical terms, backing away from the Medicaid expansion would have much bigger consequences. How Bevin approaches unwinding the law may serve as a test, and this is the point. How he does this may serve as a test for Republicans trying to do the same thing nationally. Democrats still control part of the Kentucky legislature, and then there's the test of how willing the public will be to have tangible benefits taken away. A Bluegrass poll conducted last week found that a majority of voters supported continuing the expansion. Overall, 54% said that they would like to see the state's next governor continue the expansion. Only 24% said they wanted it repealed, but somehow this guy still got elected. I hope you have the answer, because I don't. All eyes will be on Kentucky to see how this plays out, what's going to happen to these folks. We've said it on this show so many times. We want everyone in America to have affordable health care. I don't have affordable health care. I get up and work every day, but I don't have affordable health care. I know some people who don't get up and go to work every day, not because they can't, but because they don't want to. They have health care. I know someone that's about to have surgery. It's pretty intense surgery, and my heart goes out to him. And, I'm more concerned for him as a friend out of human compassion than I am the politics behind the whole thing. But this guy hasn't worked in many years just because he didn't want to. He had a nomadic lifestyle, so to speak, and he just, lived on the underground economy. Okay. But he's got the finest insurance the state of Arizona can offer at no cost. I'm so buried in insurance premiums, I can't afford to go to a doctor. So, enough of my whining. That's our whine for the day. Michael, take it away.
Okay.
While I just go weep in the corner.
Yeah, believe me, I know. I've been paying insurance. Massachusetts is horrible. I pay.
We should all move to Kentucky. I don't know. Maybe that's the answer.
$17.50 a month for the policy that I have.
Well, see, I'm blessed because my kids are covered because of the adoption. My kids are covered by the state of Arizona until they're 18, 21 if they choose to go to college, which they will. So.
Oops. That was the wrong person to send it to.
Huh.
There we go. Yeah, you are blessed. I have to carry my wife my ex for 9 months. And then I'll get to see if actually I think I can check now and see if it would benefit me to dump her off my policy. Anyway.
All right. Well, I can see your charts. I'll hit mute so you can do the recap, and I'll be here when you're done.
Awesome. All right. Okay. Here we go. Members here. No, not that. Home page. All right. I'm going to hit record. Good afternoon, everyone. Today is Wednesday. Wednesday, the 4th day of November, 2015. All right. So let me just start out like this. If you have not taken a free trial with us, in the right-hand column, go to register for a free trial, put in your name, put in your email, click register for a free trial. When you do that, you'll be sent a confirmation link. You must take the confirmation link, okay? You must click the confirmation, take the confirmation link. You must click the confirmation link, okay? If you don't click that confirmation link, well, then you won't get a free trial because we don't know that you took the free trial until you actually click it. All right, so live trading room results. You click there, and then click there. Today in the live trading room, finally this month, we have our positive day. We almost wiped out the losses. Almost. We were down 390 coming into the day, so we made $300 today. We were up 30 on the Russell, down 10 on crude, down 5 on gold, and up 12 on the ES today, so plus 300 on the day. This morning it took us 15 minutes and 4 trades to get to our goal for the day, and when we finished up that trade, we were at $110 a contract. We took a total of 23 trades today. On the month, we are now down $90 a contract, and over 3 trading days, we are averaging minus $30 a contract. We'll get that better. We'll get it better by the end of the day. Not the end of the day. Probably by the end of the week, we'll be positive on this. Better be positive by the end of the week. The net profit, though, if you add in the commissions, that'll be next week. Probably we'll be positive on that. Okay. On the year so far, we're up $55,297. That's over 207 trading days, averaging $267 per day. Yeah. Okay, that's that. All right. Now let's go through the trades, the actual trades that I took. And we took 23 of them today, so it's a fair amount. On the gold, our first trade of the day in here on gold was right here. We had a break even on that one. The next one was right here. We had 3 ticks profit there. Break even here, stop out there. We're at -5 right there. And we had a couple more break even trades. And so -5 is where we ended the day on the gold. Okay, I don't think I really missed. I missed this one. And maybe this one right here. Okay, so I missed probably 2 trades in the gold today. And we ended with -5. Okay, the Russell. Now, go to a 5-minute. Go back here to a 4-tick range. Anyway, on the Russell, we had a bunch of trades on the Russell today. Okay, so we'll get all those picked out for you here. And scrolling. All right, here we go. On the Russell, our first trade of the day here on the Russell, we made 1 tick profit on that. Okay, the next trade we made 3 ticks, so we're at +4 right there. On this one we made 7 ticks, we're at +11. This one over here we made 10 ticks, so we're +21. Then 6 on this one, we're +27. Then looks like we missed a trade here. Missed a trade there. Let me do this. Let me get rid of this. All right. We missed a trade there, but we grabbed this one for 3 more ticks, putting us at +30. Had a break-even trade over here. And scrolling over. Okay. We missed a nice trade right here. Another break-even trade there. And +30 is where we ended the day, but I'm just looking to see what else happened here. Okay, during the break, got back up into the zone here during the break. There was a short trade right here, but it got back up into the zone, above the zone, and really didn't give any trade setups during the break. Okay. Tanela, you asked me that at 12:32. This is expanded. You mean back it out like this? I don't know. Well, this is the flow PB. He's using the CFTC. Okay. All right. That was the Russell. On the Russell, we were plus 30 today. On crude oil, on crude, we were minus 10. Okay. Minus 10. All right. Here we go. Here we go. We missed a trade right here and right here this morning to start out the day with crude. Missed a couple of trades there. Missed a long trade right here. And the black step line crossed below right there. That's why we didn't take that. We got short over here. We stopped out, so we're minus 8 right there. All right, we had a break even in here. Now, after the stop out, we could have gotten long right here, I guess. I missed that one. Then again, right in here, and I missed that one. We had a break even. Then we had the crude inventories come out right in here. All right, I wasn't really watching it. I was sending out the 1 trade a day things. But there was a short trade here, a long trade here. Another long trade in here. And I got short over here. And on a crude, I made 3 ticks profit on that right there. Okay, to put me at minus 5. Then right here, I made 3 ticks profit on this to put me at minus 2. And let's see. Long trade right there. Okay, and right in here. Huh, I didn't count that one. Well, whatever that was, I didn't count it. And that one I missed. Stopped out here pretty much to the tick, putting me back to minus 10. And then let's see, during the break, it was a long trade here. And a short trade here. I don't think either one of those would have worked out. You can see crude is moving down right now. We don't have a trade set up there right at the moment. Okay. KC. Yeah, I can give you the link to that. There you go. All right. Soybeans. In the soybeans today, we had. I got profit on this trade today. I didn't count that either. Anyway, we took the 1 trade in here, and it looks like I took a couple of ticks profit on it, but I didn't count the soybeans profit in my total. Since then, the beans went pretty sideways all the way over to here, and now they're pulling back and testing the BBC, but it would need to close above this trend line. Okay. We had just the 1 trade on soybeans, and I didn't count it in my total. On the ES, we had 2 trades. This first one over here, I took 8 ticks profit. I missed that one, and I took 4 ticks profit from this one. Okay, so the ES was moving around pretty nicely today. Well, enough. Okay, nice enough. And that, my friends, is that. I did show 1 bond trade today. I said it'd be short up here at 54.25, and that one dropped down to 54.11. Okay. Quickly, I'll look at the NQ because I know some of you guys like the NQ. I did not do a breakout trade in the crude today, John. I was sending out those things that you didn't get. On the NASDAQ. It was right at 10:30 when I was sending out the 1 trade a day things. On the NASDAQ, there was a ton of movement here on the NASDAQ today. Look at it. A ton of movement. You know, I may put the NASDAQ in instead of some other market. I don't know which one to replace, but a ton of movement on the NASDAQ. All right. So let's go back here. How much you pay monthly for the unaffordable care? I have no idea. All I know is how much I pay for my health insurance. It's $1,600 for health and another $150 for dental. Actually, it's $175 for dental, so it's actually $1,775 is what I pay. All right. So today we made 30 ticks on the Russell. We lost 10 on crude. We lost 5 on gold, and we made 12 on the ES. That puts us up 300 on the day. On the month, we're now at minus 90 because we had two days where we were negative out of the 3 so far. In the 207 trading days this year, we're up $55,297.50. Okay. If you have not taken a free trial with me, and you would like to take a free trial with me, with us, no, I'm $1,775 a month is what I pay for my health insurance. Go to CFRN.net, the homepage at CFRN.net, and in the right-hand column, put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. Click on the confirmation link, and you'll be sent all the stuff you need for 5 luxurious days in our live trading room. Okay, and John, you'll be all set for tomorrow. Okay, all set for tomorrow. Here it's like this. It's like that, Bob. All right. And that's it. With that, I'm going to stop the recording, and we can head back out to Phoenix. Phoenix is ready for us. Are you ready, Phoenix?
Yes. Ready.
Okay.
Ready on the left, ready on the right, ready on the firing line. Let me get the charts.
Yeah.
Okay. Okay, here we'll just do that. Okay. All right. Recap of the recap.
Today it took us 15 minutes and 4 trades to get to $110 per contract.
15 minutes, 4 trades. So for those who might be new and don't know what that really means, that means when it takes us 4 trades, if you're trading the 2420 blueprint, which is designed to help you go from 1 contract to 20 contracts over a period of 24 months, doesn't matter really what market you're trading. Some markets can be traded around the clock. Others are best traded during regular trading hours. The Russell, for instance. I mean, at the London Open at 3 a.m., there are some days when there is some pretty good volume. And then there's other days when it's pretty anemic. So if you're going to trade 20 contracts, regardless of when you trade 20 contracts on the Russell, for instance, even in the middle of the day, I mean, there'll be plenty on the bid and plenty on the ask. But it's changing so quickly that what's going to happen is some of your contracts are going to get filled at one price, and then the balance will get filled a tick lower or a tick higher, and that's something that you just have to mentally adjust to and know that that's going to be part of the deal. I mean, that's just another truth about trading. Are you a fantasy sports guy, Mike? I know you like sports.
I am not. I just do not have time to keep up with all that. I do like sports.
Do you understand how the whole thing works?
Honestly, I don't.
Okay, fair enough.
You pick players, and if those players play and they do well, then you get points or something.
Yeah.
I
had guys working for me back in, oh my goodness, 83, and at their desk all day long, they had their sports page out. I'm like, guys, come on, let's get on the phone, go to work, you know. Oh, we're working. Yeah. They were like going through the sports page, you know, and like when the football season started, you would pick your team, and your fantasy team would play out over the whole season. And then at the end of the season, everyone would be able to somehow calculate and figure out, you know, who won. based upon this fantasy team that you put together. I really never understood all of that. Now it's computerized, and now it's monetized. Are the commercials playing where you live?
Oh yeah,
For
yeah, constantly.
FanDuel and so there's a big
Constantly.
lawsuit going on. Some company claims that FanDuel and the other big one has infringed on their patents, and so big money lawsuit in the works, and they're gonna have to. It looks like they're gonna have to pay. Now there's guys coming on the commercials saying I've made X amount of dollars since I started, and I mean, my guys were pretty fanatical about the whole thing, and their quote-unquote game ran the whole season. You know, it was like you went the whole season to find out who won. Now it's game by game, and you can even figure out where you stand in the middle of a game. You can log into the website, and so I see this as, you know, building to a fever pitch because many people are, you know, well, we know the billions of dollars that are spent a year on sports, from people buying tickets to the salaries that are paid and everything in between. All the licensing fees, even down to the guy who sells the little miniature bats in the gift shop. That was on the Profit the other day. I mean, there's just so much money changing hands. So that means there's an awful lot of people packing these stadiums. Oh, another, on Shark Tank the other night, this wasn't a rerun. This was I think the most recent edition. These guys have an idea. It's already an operating business. They're already doing it. In college towns, they help people rent out their house whenever there's a big game. Because there's a lot of stadiums that will pack 50,000 people in on a weekend to see a college game. So people come from out of town and they stay in the hotels, but it's like a big family, and so they've got, when the game's over or after they go out to dinner, everybody goes to their separate hotel rooms. And so that's no good. Everybody wants to stay and hang out together, grandma and grandpa, aunt and uncle. It's a family affair. So these people started a business helping. See, I grew up in Augusta, Georgia, where the Masters tournament is held, the Masters golf course. And so I'm familiar with the concept because as a kid, we knew people who would rent out their house each year for the Masters. And they would get some princely sums for modest homes. People coming in from out of town don't want to stay in a hotel, want to stay in a house, you know, with multiple bedrooms, a bunch of people can stay together. And so these guys are doing the same thing, but they're doing it, they modeled it kind of after Airbnb. I don't know if you're familiar with that startup, but their valuation is in the billions. People laughed at them when they started up, and now they're just killing it, making a ton of money, like Uber. And so I forget the name of these. I'm trying to remember what these guys called their business. But it was just this past Friday night, and they got funding. In fact, if I'm not mistaken, the Sharks fought over funding them because business is exploding. That's how big sports is. And so back all the way around the mountain to this fantasy sports thing, I think it's going to get to the point where people won't be able to work. They won't be able to focus on their job, you know. I mean, in '83, I'm having to yell at the guys, put the sports page down and go back to work. But now that you can be interactive on the computer or on your smartphone or your tablet with this stuff, I got nothing against sports at all. Nothing at all. I just think we're going to see some problems. And of course, the gambling thing, I don't know if you can make a lot of money, they say, but I haven't heard anybody talk about how much you can lose. Is there anybody in the audience who plays fantasy sports, who has a team, who has participated in all of this? Let's see. Let me scroll down. Are there any questions, by the way, that haven't been answered?
Hang on.
My health insurance premiums went up over 42%, plus my deductible went to $4,000 and $1,500. Yeah, it's pretty terrible. I feel your pain.
Yeah, everything's been answered.
Angelo says, let's be positive and make money so we can pay the premiums. Yeah, you know what? That's about all we can do. Christopher said, moving to Kentucky is not the answer. Yeah. Okay. Scrolling. All right. I guess everything's answered. All right. Let's go to our good word for the day, and then we'll hit some of the alerts. Then we'll talk to David from Page Trader, and then we'll talk to Jim Whitebar Cox, and we'll finish up whatever Concierge Trade Alerts we don't get to. Now, we've been talking the last couple of days about signs of the times. The disciples wanted to know in Matthew 24:3, what will be the sign of your coming? They asked Jesus this question. And in Matthew 24:6, Jesus, this is written in red in your red letter edition, it says, there will be wars and rumors of wars. So today is installment number 3. Our scripture is Matthew 24:9. Then you will be handed over to be persecuted and put to death, and you will be hated by all nations because of me. Jesus said to his disciples, now again, red letter, you'll be handed over to be persecuted, put to death, and hated by all nations because of me. At that time, many will turn away from the faith and will betray and hate each other. And many false prophets will appear and deceive many people. Because of the increase of wickedness, the love of most will grow cold. Matthew 24:9 through 12. Notice the words, put to death. Heaven is filled with those who have already fulfilled this prophecy, and hatred of Christians still abounds. Voice of the Martyrs, a Christian agency that defends religious liberties, contends that more of Christ's followers have been killed for their faith in the last century than in most of the previous centuries combined. ISIS is doing a bang-up job of it right now. The global evangelism movement reports an average of 165,000 martyrs a year. These are people who will not deny their faith when asked, are you a Christian? Rather than say, no, not me. They say yes, and they exchange their life for their beliefs. Now, 165,000 a year. That's more than 4 times the number in the past century. Today, countries that facilitate religious freedom are experiencing increasing hostility towards Christians. Professors publicly mock Bible-believing students. TV talk show hosts denigrate people of faith. We can expect the persecution to increase, and when it does, fragile convictions will collapse, and as Matthew 24:12 says, the love of many will grow cold. The half-hearted will become the cold-hearted. Spiritual stowaways will jump ship. Many church attendees will be exposed as faith pretenders. They'll not only leave the faith, they'll make the lives of the faithful miserable. When these things begin to happen, Jesus counseled, again in red letters, see to it that you are not alarmed. Matthew 24:6, you'll hear wars and rumors of wars, but see to it that you are not alarmed. Such things must happen. the end is still to come. So, when the outlook is bleak, the blessed hope, Titus 2:13, looking for the blessed hope and glorious appearing of our great God and Savior, Jesus Christ. When the outlook is bleak, the blessed hope of Christ's return should calm all of our fears. And that's our good word for the day. Fear not. They say it's said more than anything else in the Bible. There's warring factions out there that say, no, it's not, and others say, well, yes, it is. So I haven't counted it. I have other things I got to get done, so I'll just let them fight it out. Okay, so that takes care of our good word for the day. Let's go to the chart. S&P 500. We had an alert last night. These are still last week's weekly trading zones. I'll get this week's zones up. I was going to try to get them up today, but they'll be up tomorrow, Thursday, for the general audience. But partners always get their zones Monday morning, 6:15 a.m. Eastern. All right? And so, last night, the Concierge Trade Alert said to be long above 2105. So we ran up 3 3/4 points. Important prices, important areas, almost always tested. We'd make another run, 3 1/4 points. Get below the trigger again, 4 3/4 points. You'll notice twice now we've stopped right at that zone from last week, 2110/2111. We also had an alert on the downside to be short below 2096, and that yielded 2.5 points. Okay. All right. Let's go to the other markets. On the Russell, here's what happened. We had an alert to be long above 1189. Now, this first swing high was 1191. From 89 to 91 is 2 points, 20 ticks, but it's 1191.1, so you can argue it's 21 ticks. At $10 per tick, that translates to be $210 per contract. Okay? Now, on the short side, we said to consider being short below 1182. 1182. I should give you a peek here. Short below 1182. We didn't get below 82. We got to 82 to the tick, but we never got below it. We rallied again here. After we got below the trigger, we come back up, and we put in a swing high here at 90.3, so that's 13 ticks. And then we get below the trigger, and off we go again. This time we put in a swing high at 93.1, so that's 41 ticks at $10 a tick. Then we get back below on this candle, and we rally again. Now this time we get all the way up to 94.3. So that's going to be 53 ticks or $530 per contract on that candle right there. Okay. Let's see. What else have I got marked up? I've got the Dow marked up. We had an alert to be long above 17,850. The first move, the first trigger ran 40 points. There's no ticks in the Dow, it's just points. Pays $5 per point, and so we need 20 points to make our $100 per contract per day. But this first move gave up 40 points, the second move gave up 39 points, and the third move gave up 56 points. And then this little move to the downside gave up 9. Okay? Bonds. Bonds I haven't had a chance to mark up yet, but I will real quick, and it'll be time to go to Vegas. Okay, let us get our vertical line going on right there. Okay. All right. On bonds, which by the way pay $31.25 per tick, far more than anything else that we trade. ZB Z5 long above 154.31. 154.31. Okay. Okay. See the swing high right here? Swing high is 155. There's 32 ticks to a point. So what does that mean? It means it went one tick over the line, which ultimately led to a stop out. We don't risk 8 ticks on bonds since we're only looking for 4. Now, if you're looking for more, you might risk more, but if you're trading the blueprint, you will never risk more than what you're looking to pick up on the trade. On the short side for bonds, the number we were looking at was 154.22. 154.22. And that's going to be right there. There we go, 154.22. So we had a couple of, unfortunate moves. If you watch the Concierge Trade Alert recap last night, I went through that trade I went through on the Euro with you yesterday. Using your indicator set will often prevent you from entering some of these trades, and in other cases it will get you in a little bit early. If you're trading just the pure alert number, then no matter how you trade, there are going to be stop outs. That's the truth about trading. Okay? If you haven't read that article I wrote, The Truth About Trading, you should read it. Because if you believe anything other than that, it's just going to cause you pain. Much pain. All right, ZBZ5. Okay, it was 154.31. 154.31. All right, and on the short side, it was 154.22. Okay, so we finally got, on this move here, we got down to 17, okay? And this candle here, we got down to 15. And this, as we move into this hour, we got all the way down to 11. Now that's an 11 tick move. That's decent at 31.25 a tick, okay? But these stop outs are real, okay? And that's why I recommend, if your partner, layer your indicators on top of the alerts. That's not going to stop you from getting stopped out. Nothing will ever stop you from getting stopped. There's no indicator, oscillator, nothing. Okay, you just have to accept it as being part of the business. Okay, once you do that, then you can move on with life, so to speak. So for 154.31, we put in a swing high here of 155.09. So that's a 10 tick move there. Okay, all right. Now we'll pick back up with crude oil when we come back, and the alert on crude was to be short below 47.55, and so there was 2 opportunities for that, both here and here, but we'll talk more about that when we return. Now we're going to go to Vegas, talk to David from Page Trader. Don't touch your radio dial. We'll be right back. All right? All right.
Cupid, we don't need you now. Be on your way. I thank the Lord for love like ours that grows ever stronger. And I always will be true. I know you feel that same way too. Oh, I love you more today.
Good morning, Dwayne.
Hello, David. Good morning and welcome to the show.
Thanks very much. A real pleasure to be here. We've got rain here in Las Vegas today, starting to clear up some. I wonder if you have anything like that happening in Arizona.
We had some overnight and early this morning, and
Okay.
now we have partly cloudy skies.
Well, there you are. We have some cool weather.
Yeah, the temperature today, let's just take a gander. Right now it's 63. There we go. Mostly cloudy and 63. The high will be 70 and the low will be 48. This will be the first night that we've been into the 40s since earlier this year, back in January, February. And I assume the same for you guys?
Yeah, pretty much so. Pretty much so.
Okay. Now, a couple things happening. Janet Yellen spoke today. Draghi also spoke. Draghi spoke yesterday afternoon at 2 p.m. Eastern. Then he spoke again this morning at 4 a.m. Eastern. I don't know what he had to say. I haven't had a chance to chase that down. I do know that Janet Yellen, the new Fed chairman, said that a rate hike in December is a live possibility, which is sort of an unusual way to say that it really could happen, I guess, but that's
Sure.
how she worded it. She said it's a live possibility. So we're back to the wait and see what's going to happen. The other bit of news is Kentucky. Kentucky has a new governor, and part of his platform as he ran for office was that if elected, he would rip up every shred of the Affordable Care Act in his state, and the huge Medicaid expansion, he was going to shut that down too. Now, probably don't have to say he's a Republican, but he's a Republican. He was elected governor. And this is a state that saw the second highest number of enrollees next to Arkansas. Arkansas was the most, followed by Kentucky. They did polls, and the people in Kentucky actually wanted to keep this affordable care, I guess because so many of them qualified for it, either for the Kentucky, we'll see now, Kentucky, they did their own exchange called Connect. I don't know if you're familiar with that.
No.
Yeah, I wasn't either. A Bluegrass poll conducted last week found that a majority of voters supported continuing the Medicare expansion. Overall, 54% said they would like to see the state's next governor continue the expansion. Only 24% said they wanted it repealed. Now, the guy, I wanted to see where the guy made the comment about the lifestyle. Let me see if I can find that real quick. I'll share that with you and then get your comments on it, and then we can go straight to the markets if you want to.
Sure.
Lifestyle. Okay. When you re-enroll, you may or may not have access to Medicaid going forward, Bevin said in an interview with Politico. People are not on it for extended periods of time. It is not meant to be a lifestyle. It really isn't. The point of it is to provide for those who truly have a need. Now, the governor seemingly hedged on that stance later in his campaign. That was a comment he made early on in the campaign. Later in the campaign, he suggested he would follow the example of other Republican governors who have worked with the federal government on modified versions of the expansion. But all eyes will be on Kentucky. How Bevin approaches unwinding this law in Kentucky may serve as a test for Republicans trying to do the same thing nationally. Democrats still control part of the Kentucky legislature. Then there's the test of how willing the public will be to having tangible benefits taken away. And their exchange was called, the heading on the article was one of the Affordable Care Act's biggest success stories since its implementation came in an unexpected place. That would be in Kentucky, the deep red southern state that has drifted further and further away from the policies of national Democrats and President Obama. The bluegrass state's Democratic governor, Steve Beshear, embraced the law known as Obamacare. The state set up an exchange called Kynect, K-Y-N-E-C-T, that thrived in 2013 as the federal government's website was mired in disaster. And Kentucky expanded the federal Medicaid program, signing up more than 375,000 people over the first year of the expansion. One study found that the expansion could inject as much as $30 billion into the state's economy through 2021 in the form of tens of thousands of new jobs. But most of Obamacare's success in the state is under significant threat after Republican Matt Bevin won Tuesday night's election for the governorship. So there's a new sheriff in town, down Kentucky way, and he said he's going, that was part of his platform. That's what got him elected, is that he's getting rid of it. So any thoughts on that and how other states
I just
may
think
follow?
a lot of people have found what we have found, which is that of course, they named it the Affordable Care Act precisely because it's not affordable to most people. Most people are paying dramatically more year by year, and it will continue to go up. Mine has gone up 260% since it was enacted. I don't know what percentage yours has gone up, but two people can easily pay $13,000 a year of their income towards health insurance, and that does not include their deductible per person. So the numbers are really that if you were going to use your health care, let's say the average two people are paying about $13,000 a year now, and then you have a $5,000, $6,000, or $7,000 deductible. So, by the time you end up going through all that, you've spent $17,000 or $18,000, and then wait till you see what the health care you're going to get, the quality of the health care you're going to get is. It's going to be really poor. And as we all know, many serious doctors, people say doctors make a lot of money. It's true the doctors have in the past made a lot of money.
Not every doctor's a plastic surgeon in Beverly Hills,
No, but they make a decent income because they have a very high level of education. They had to go to school for many years and so on. But the truth of the matter is that many doctors actually want to be great doctors. They want to take care of their patients. They want to feel like they're doing good. And doctors are usually serious people. They want to, the ones I've known, they really want to help people. And now you're down to 6 minutes per patient. Somebody that I currently know has a wife that has some kind of neurological problem with her back and her spine, and they took her to the doctor, and they said, well, that's a back problem, and so you have to wait 2 weeks. You have to suffer 2 more weeks so that we know that it's not an ordinary back problem that would just go away in 2 weeks. So we're not going to treat you. So you have to go home and suffer with whatever you actually have, which could be a very serious issue,
right,
so that we can know that you suffered enough that it's probably something more than an ordinary back problem. That's the kind of health care plan that we have. We got shafted. I mean, everyone, including Democrats and the far left, are going to find when they go to their doctor and try to use the Affordable Care Act that it is neither affordable nor is it real care. That's what I have to say about it. It's crap.
Okay, now let me ask you a question. What if she had money in her pocket?
Well, you can still go to a doctor and pay for his services, if that's what you mean.
Yeah, that's.
But then you're going to have to pay a fine for not participating in the service. I mean, why even make it, look like it's optional when the fine is high enough to, they take, what is it? I think 1 or 2 or 3% of your total gross income, and they fine you that, so whatever that is.
I don't know what the
Yeah.
fine is.
So it's really not optional for most people. You just have to be in it, and that's why it does need to be changed. It was a badly enacted plan. It was a badly planned plan. It was a badly enacted plan, and people all over the United States are finding out that their health care is dramatically higher than it was before. I wonder if there's anybody in the audience that would like to come forward who is not one of the people who is being supported by others' payments, but is somebody who's just ordinarily paying, whose insurance actually went down. And of course, we're only asking that as part of the bigger picture. That doesn't address the quality of the health care that you're going to get. But it is not affordable, and it is not care. It's anything but care. A very good friend of mine has a wife, like I said, who has this neurological problem in her back, and it's extremely painful. She's on all kinds of narcotics now, and that can trigger a depression. And they sent her home for 2 weeks to make sure that it wasn't just an ordinary back problem. That's not what doctors used to do. They would check you out right then and there and find out what the heck it is. So, it's very poor medical service is what you're going to get. And you'll see, hopefully none of us will need it, but you're certainly going to pay for it over time. I've said before, and I'll say again, that I'm all for helping people who legitimately, I want everyone to be covered in the sense that if somebody has a sickness, they can go and it's not going to cost them whatever their savings are and so on. I'm really on board totally with helping those people out legitimately. But our government doesn't know how to do that kind of checking up on people. They don't really care. They just let stuff happen. It's a boondoggle wherever you look. And, one of the things that Donald Trump says is that we're not winning anymore. America's not winning anymore. That's a really good way to say it. I mean, we are not winning in anything that we're doing anymore. Everything is turning into mediocrity. Everything is just being dumbed down to its most basic level. And this goes all the way across the board, from our relations with foreign countries all the way back to our health care, to how politicians are getting out of the whole IRS thing, and all the boondoggles that surround this administration. We're just not winning anymore. It's just going downhill. So we certainly couldn't have an election coming up soon enough, as far as I'm concerned. And hopefully we'll be able to modify this program in some way so that it makes some sense.
Mm-hmm. Boy, that'd be awesome, wouldn't
it? Yeah, it really would. It really would.
Okay. As far as you want to tell you what? Why don't we go to the markets, and if if there's any other news headlines, we can talk about them. But let's get that covered. If you want to start with the S&P, and then I've got questions about what do you think about crude, and what do you think about the euro?
Sure.
The usual.
The usual stuff. A couple things I think are really important. First of all, just in general, the S&P is taking back quite a bit today of some of the recent gains that the market had. And by getting below some pretty important levels that we think are pretty important, if we close the week, as an example, back below 2094, especially somewhat significantly below that level, it starts to really still point to a very important weekly top. And what is a little unusual, just through experience and having done this for a long time, is that they're potentially doing the take back on a Wednesday, where quite often the market will wait for later in the week, like a Thursday or a Friday, something like that, before doing the take back. They're not going to just show their hand in the middle of the week, and this market is showing its hand in the middle of the week here, or I believe they are. This morning we had an indication about 30 seconds into the open. The market was trading up at, wherever it opened, 2090, 2107 or where did we open today? We opened at 2107.
Okay.
And our first indication was the market would come down and test 2102, and if they firmed up on that, we might have something to do, biased to the long side. But the first hour, it did go down and did test 2102, but we were really watching it for the second hour, and the second hour closed below 2102. It closed at 2095.25, so that was an early sign for some weakness. Then we mentioned that 2094 would continue to be tested, that we weren't going to be interested in the long position until midday test or a little before for 2094. And you can see they've broken through 2094 now, and they're attempting lower prices. So this is starting to look like, just in terms of the way of just looking at the market, not really applying technical work here, but just that it's a take back, it's a clawback of prices that would have left the market on its weekly close in a much stronger position. We still could close the week well. You know, the day is pretty young here still, and it's possible that we may be able to do something with this, but it has been a down day so far, and the market is attempting lower prices here. So I have to say that I'm very interested in how the S&P confirms or denies all this, because they really are kind of flushing out here. Now, one last thing I'll say about this. Obviously, the bigger picture is what's most important to us. The bigger picture meaning like on the weekly chart and so on, or 3-day chart, whatever longer time frame you might want to look at, but something a little larger than daily. But if we continue lower here, if we were to get down to the 87, we talked about earlier today about, you know, the next important level. If we got down to 87, 86 or something like that, it starts to get more interesting at that point for the remainder of the day, because we might be able to do something with that in terms of a trade. But this is a interesting and even somewhat provocative thing for the S&P to, on a Wednesday midweek, do the take back. And so it should be interesting how they handle this. I'd be careful with it, of course. You know, our goal is not to make money at a certain rate or a certain period of day or something like that. Our goal is to only be in the market when the odds are notably in our favor, according to our methodology. And so we are going to wait a little longer here and see what we can see with the market. And if we do get down to some lower prices, we may have a trade based on this. So, you know, barring other information that we put out in our messenger window or so on, I think it's very interesting today that this is happening. And I know Draghi spoke today, and we've got other kinds of information, but up until Tuesday, it looked like the market was just walking right through a weekly top. And that's a very difficult, it takes a lot of force to do that. The market has these forces that play out in any number of ways, probably close to infinite number of ways. And one of those is that the market could put in a weekly top and could have a larger force coming in right behind it that pushes it right through. But that does not happen very often. You don't see that very often, and this is an possible early sign. It's too early to know for sure because it's only Wednesday, but it is a potentially early sign that our weekly close would still confirm the weekly top, and that would imply a multi-week decline and substantially lower prices. So that's our take on the S&P for just now. If you ask me in an hour from now, we may have an updated version of that, and so on.
Okie doke. All right. Want to move to which market? Crude?
Sure. Whatever market you'd like.
Here's crude. Yeah, got a big sell-off in crude today. Inventory numbers came out.
Mm-hmm.
And that's one that they're asking about. So here's a daily or an hourly chart of crude oil.
Yeah. So crude oil we had an indication that if the crude got above 46.20 or 46.60, either one, that the market would advance to 47.30, maybe a 60-cent move, something like that. And that happened yesterday. The market did complete that. They already actually did a full dollar beyond that. But just calling out the trade that we were talking about, that completion is sending prices down. I mean, in the technical sense, the way we look at the market, we know that there's inventories and so on. But just looking at the chart, We're interested, and I'll just give you a little bit of what we're interested in. We're interested in seeing if crude can handle the $46 level or slightly below and still firm up. If they can't, then we would expect lower prices into roughly Friday. If they can, and we have those prices, but if they can firm up above $46, then we may end up being long in crude into tomorrow for higher prices. So we're very interested in that, and we do have some longer term indications for crude that are starting to come into, just the edges of it are starting to come into play for early next year. And that would be a very interesting set of conditions if we get a trade, because it would be a sizable move into early next year, and we're working on that now. So I hope that's interesting.
Well, I mean, overall, I mean, just big picture, what do you think we're going to see? I mean, is crude stuck in this range for a while?
Well, I think what I'm addressing is that this range is not going to last much longer, because into early next year we have some indications for potentially higher prices substantially, and we're not ready to put that out as a trade. We're not telling people to buy it right now or anything. We need some further confirmation into a move like that. So
Okay.
That's something. I have, that's probably that is the biggest thing that we're looking at right now. But early next year is a few months off at this point, and the market has plenty of time to get itself set up for a move. And of course, we may get a big chunk of it, we may get a smaller chunk of that move, but what we will get is a high probability that that's going to happen by the time we're potentially by the time we're trading it, hopefully. So that's what we're looking for.
Okay. All right. Let's see the other requests. Bonds.
Well, the bonds, again, the markets have been very interesting as of late. They've been, there's been some complexity to a number of these markets: the euro, the dollar, the bonds, the S&P with what they just did. This is, there's been some complexity in these markets. I don't have an immediate forecast. We did actually today have, for aggressives only, a long position in bonds that did end up not completing. In other words, the market got below what we felt was a reasonable level. In spite of that, I still am somewhat interested in the bonds, in a possible long position for bonds, but we're not taking that. Again, I want to make it clear that we're not saying go long right now. We just have a early indication that might continue to flower, into something that we could trade into tomorrow or Friday. So the bonds have been in a pretty good decline here, and this is partly why I think Janet Yellen may have been talking about, well, we'll see, maybe we'll do something in December. And I think she's saying that because the bond market is starting to show little cracks in the armor here. It's not huge, but it's enough that she might be looking at that, and that's one piece of what she looks at.
Right. Well, here's a glimpse at what Draghi said this morning. The European Central Bank president, which is their version of our Janet Yellen, Mario Draghi reiterated the European Central Bank is ready to provide more stimulus in December if needed to boost inflation. So they're now doing their version of the quantitative easing that we were involved with for a number of years.
Yep.
So that's what he said. Now, Janet Yellen this morning, she said, and here's another, I already gave you one of her quotes, which is it's a live possibility. Here, markets, however, trimmed gains in afternoon action after Federal Reserve Chairman Janet Yellen said that it may be appropriate to raise interest rates in the U.S. next month. Draghi said that the European Central Bank's current stimulus program will need to be re-examined at the December meeting, indicating more easing or a rate cut could be on the way. The comments reflect the message from the ECB's October 22nd meeting, when Draghi expressed concern over the low inflation levels in the Eurozone. Given the turnaround in the ECB's view on deposit rate cuts, we expect a 10 basis point cut, together with a strong signal that further deposit cuts are on the table. We believe the ECB will reintroduce its old forward guidance, stating that it expects policy rates to stay at present or lower levels for a long time. They're starting to sound exactly like we sounded, but now we're coming around the backstretch, and now we're starting to talk the other way, that maybe the time has come. Here's a look at the euro. If we go back, this was the high Friday afternoon. Well, let's see. No. Getting ahead of myself. This was Friday afternoon's high. Then we opened Sunday night. We gapped slightly higher in the euro on the open Sunday night, Globex. And this is where we've traded down to so far today. Now, it was a pretty good drop during these 3 hours. And that began at 8 a.m. In the last couple of hours, the momentum seems to have slowed, quietened, but now we've got another hourly candle. We're 30 minutes through on your chart. On anyone that's using a day session chart, you'll get a new candle in less than a minute. We're still 30 minutes out from getting our next candle. Now, there was a question in the chat box. Do you have any target, David, on the downside for the euro?
No, not yet. But for the bonds, we had mentioned the other day on your program that we were looking for the 44.12 level, and they reached that today. I think our low is 11. And that's one of the reasons that we're interested in that. I think the dollar still has a little higher to go, so that probably means the euro most certainly would have a little bit lower to go potentially as well. So I don't have an actual target on the euro just at this moment. So
okay, sorry, Canoe, I couldn't get you a number, but
yeah,
I will. I'll tell you what we'll do.
You know,
We'll when we finish talking with David, we can do some Fibonacci extensions and just use math to pinpoint some areas on the downside where the market may find some support, and we'll look left and see where the market may find support. So let's see. Bruce wants to know if we got anything on gold, and Ed wants to know if you have any indications for the dollar index that you stated you were working on yesterday.
Yes. A couple things. Gold, we have this fantastic decline underway in gold. We're very interested in the resolution of this decline because we have some indications that I'm going to hold off on giving them right now because we just talked about them in today's meeting. But depending on how they handle this decline, how much more damage they do, I think, is going to help us determine whether or not our next indication in gold is going to be something that we can trade. But the last indication before this was for gold to run from 1110 up to 1190. And they did that, but they got to 1190.170. There was no frothiness, no exuberance up at that number, and we were concerned by that at the time, but not concerned like they were going to be all the way back down to these levels, but just concerned that they didn't show that the move might not be able to be continued with dramatically higher prices or anything like that. And it turns out that the market really had no intentions of going dramatically higher at all there, and that it kind of showed its hand, at least a beginning of showing its hand up at that 90 level, which is going to 91.70. And we're down now at 11.06. We're talking about from 11.90 to 11.06 now. So we've taken all that back. I'll give you a hint, though, that the market will often try to flush out and demoralize. The smoothest paved road a market can give you is after it's demoralized the majority of the people from being in that move. So in other words, when if the market is going to go up, it's going to do its best to demoralize people on the way down and flush out and so on. That's just the nature of how markets work. Some of them do that more often than others. The S&P does it in every instance. virtually every time on any time frame the market is trying to flush people out before running it to scale. You know, if you're talking about somebody that's trading for a few ticks or sort of scalping, you still see it happening down at that scale to scale, and you also see it happening up in larger trades at that level to scale. So this gold decline may be doing this in order to later have a much larger decline that would take the 1191 and so on significantly out. That's a possibility. We're working on all this stuff. I'm telling you that the markets are a little more complicated right now, and one of my fallback things is that I don't like to struggle with the market. I've learned from myself that if I struggle, it means it's really not my trade. I'm in over my head a little bit. There's nothing wrong with practicing and trying to get better at solving the puzzle in front of you, and you can do that, and I do it. But I can tell you that with regard to actually trading it or giving out indications to our followers, we're not going to struggle to come up with something and then give that out. The stuff we're going to give out is going to be pretty easy and pretty obvious for us, that the indications are in order and everything is there, and then that's where we get consistency from. And I think consistency is vastly underrated. It's vastly more important than how much you make per trade. Consistency beats dollar per trade. Now we still have very nice dollar per trade gains. Gold was an $8,000 per contract move. Many of our people got $4,000-$5,000 per contract out of that. I mean, those are some big numbers. But those numbers do not beat consistency. In other words, over time, consistency is much more important than a specific dollar amount, large or small, on a per trade basis. So consistency is a very important part of our work. And so when we put something out, we want to be able to have that consistency there. It's very, very important to me that that's the prime directive. Not how much I make today or how much I'm going to make tomorrow, but how consistently can we put out a series of trades that don't have a bunch of restarts, redos, and start overs in it. They're just consistently correct. That's what we're attempting to do, and we can and do that. But I can tell you that as we're looking at markets now, they're more complicated ever since basically the fourth quarter started. We had a nice little run right at the fourth quarter starting, and then now in the fourth quarter there's more complication. Markets are doing a little bit more tricky stuff, and we just have to be a little more patient. We only have, there may be just a few indications that we've had this week that are, and they're relatively small ones, but those are the ones that we felt strongest about. So that's what we are going to be looking for here. But gold is very, very interesting. I'm delighted in a way to see the directionality of this move and how it's captured everyone's attention. That means there's something there. There's an opportunity in there, aside from potentially having been short, something like that. There's an opportunity there, and I want to remind people that I mean traders, not just ordinary folks, but people who've been in the markets, and all of us ostensibly have been doing that. That once you enter a trade and you get out, you're dreaming if you think that all subsequent price movement to your entry is actually part of the trade that you were in. It's not. In other words, when the market, gold goes down, maybe if you had shorted the market, at some number like 1180 and got out at 1160, and now they're down at 1106, you can't come back and say 1106 is part of that trade. You just didn't trade it. You traded what you're capable of trading. You have to be very realistic in trading.
That's right.
Whatever subsequent market movement happens isn't necessarily, and wasn't necessarily yours to have. It takes a skill to get that, and to be in the market and to hold for those kinds of numbers. I would not envision myself being able to hold on to crude or to gold for this kind of decline, unless we had a really strong forecast for something like that. And even then, it's still hard. Oh, ye of little faith. You have to have some faith in your methodology. And when you see methodologies that present too many conditions for stops and too many conditions for stop outs and things like that, they don't have much faith in the methodology. The methodology has to have some reality to it to allow you to allow the market some room to show what it needs to do, to go to your number. And that's important to us. Not only do you need the stop, but you also need to give the market. You need to place that stop in a place that gives the market room to get the move underway. Otherwise, you're just you'll see this a lot, just rushing your stop to a break even, which ultimately almost certainly guarantees a break even. We want to try to be in the market, all of us, and rely on whatever our methodology says the markets are going to do as best as you can. It's very common to have a methodology, it may even be a good one, that somebody is using, and as soon as the market starts moving in their favor, the rest of the whole thing falls over, and they just want to go grab their money, or they want to alter everything because they have a little bit of a lead and they're worried about losing it. You're not going to get ahead in the markets. I mean, you ask anybody who's actually done it, and I have, you're not going to get ahead in the market doing it that way. You have to have some faith in what your own work tells you the market's going to do. You have to learn to have that work, to have that method, whatever it is, however much it is, and then have the faith to actually trade it and protect yourself at the same time. That's the balancing act of trading. But if you find yourself just, as soon as you have a little tiny something, oh, we got to go, got to fix that, grab that, whatever, that's not going to work out. Over time, that's just not going to be your, that's not the doorway to, real success. You have to allow your understanding to play out in the market. That's one of the truths about the trades. The people that don't know.
Oh, I'm sorry.
What's that?
Go ahead. No, I a couple more questions for you, but go ahead.
Oh, I was going to say, the people that there are methods that don't know where the markets are going to go. Trend following is one of them. And trend followers, they probably have the most faith. They have to learn to have that faith that they believe in a trend. Their whole philosophy is they simply believe that trends develop and exist, and they're going to try to be in and let that trend exist and flower out. That's one of the toughest disciplines there are, is that, because you really don't have a place to say it's going here or a time to know that it's going to run to a certain number or any of that. But just remember, ultimately you're trading your understanding of the market, and whatever that is, your methodology, your understanding of it, you have to give the market a little bit of room to allow it to fulfill that, and a little bit of time to fulfill that as well. Go ahead, Dwayne.
Okay, Richard K. had just commented that next Tuesday he thinks it's okay to nibble or bottom pick gold. Thanks, Richard. And then Richard H. had a question for you, David. Do you think the low is in crude, or is there one more low to be made at $33 to $38 area, possibly?
I'm not 100% sure. I would like I said before, my interest in crude is limited at this point by $46. So if we test 46, what was today's lows? 46.17. So we went to the level, but our interest is how they handle 46. If they close above 46 today, open above 46 tomorrow, trade above 46, we may end up doing something with crude on the long side. If we see failures at 46, I have not worked out where we might go yet to the downside, but it might prompt a new short entry. So again, as opposed to just directly forecasting, saying this is what we think is going to happen, we're waiting. We're in the collecting information stage right now of crude to wait and see. And so I don't mind if it takes a day or an extra day. What is that? But why would that bother anybody? It doesn't bother me. We want to be in the market when the odds are really strong in our favor, and it may take us into tomorrow with crude to see that. But just remember the number 46, because we think that's pretty important anyway for our work.
Okay. Mike G asks, David is buying S&P at 85/86 today? Thanks. There's a possibility that we would see a number like that, but the S&P has shown a little bit of complexity as well today. This is not, I would not consider today to be completely normal behavior. However, having said that, if the S&P were to decline, and we're running a little bit out of time here for what we think would be the normal time frame that they might do that, if the S&P was to decline and complete 87, somewhere in that, and maybe a little bit lower, we would probably be interested in that. But at this point,
until here's a way of putting it. Until we get down to 87, not that we're forecasting it directly, but only if they did, until we get down there, we're less likely to be buyers. But if we start closing back above, say, 96, that would, especially from this point forward, getting hourly closes back above 96 probably starts to get us interested in the long side for some kind of intraday trade today. But this is not what I would consider to be normal action. It started out normally today, but it now has changed somewhat. So clearly something's, for us, something is up on the market, and we want to, there's an opportunity in there. We're going to see if we can pick up on it. But if you see hourly closes back above 96, I think that probably is more bullish. If we do get down to 87 a little bit later today and firm up on that level, that may be something to take advantage of as well. But, you know, that's pretty general, because how the market gets to these numbers is part of how we judge whether or not we're going to buy it or not, and so on. So
we've got a weekly zone there this week at 86, 87. I haven't put them out for the public yet, but all of our zones will be on the chart on Thursday, as they are for the entire audience, not just the partners, but just so you guys. Yesterday there was a discussion about two different methods, and so there's an instance of, okay, the next number we're looking for on the downside with our zones, 86, 87. That's been out since Monday morning at 6:15, and so here's David using completely different methodology, finding that number significant, substantial as well. And so when you have the benefit of two, and I bet you if you ask Mike Reed, he's probably got something in that area as well, then you really kind of got to perk up and go, well, if we do get there, I'm going to pay attention, because it may really present me with a realistic opportunity to do something. Final question from Tim. For this week, does the ES have to close lower than last week's close to confirm the weekly top of 2 weeks ago is still in force?
I think all it really does have to do is close it below last week's high, but it has to be more than just a few ticks below that, and we'll address that. One other thing I was going to mention is that for us, 86, and I do have to run here, 86 is important, but only for a period of time. After our levels are not, we find it important probably into maybe the completion of this hour, but after that we get less interested in 86, even if it is reached, because there are time periods that are important for these levels as well. It's a little complicated, but so if we do reach it in this hour, we still have an interest. If it starts getting later in the day, we may change our outlook on that, because there's certain other factors that are at work. So there you are. And Dwayne, we went through it. It's 10:45, right, so we'll see you here tomorrow, Thursday. Okay. Thank you for having me on, and we'll be back on Thursday. We'll see you then.
Okay. Take care.
Thanks a lot.
All righty. And with that, we're going to roll over. Let me see if Jim is standing by. There he is. All right, Jim, I'm going to open up your mic right now. And Jim, welcome to the show.
Hello, my friend. How are you today?
Good, buddy. Ladies and gentlemen, this is Mr. Jim White Bar Cox, developer of the infamous White Bar Trade, CFRN partner, Wednesday co-host. How are you?
I am doing well. How are you today, and how is the CFRN community?
Everybody's good, man. Things are nice. Good. The weather here is just beautiful. I mean, we're in the 70s today in the daytime, and this is a place where we're no stranger to 110. Mm-hmm. Right now it's 66 degrees outside, so it looks like we're not even going to hit the 70s today. We're going to stay in the 60s, and the low overnight's 48, so man, that's just beautiful for us. Now,
well, here in the Midwest, in St. Louis, we're at 70 degrees right now. The leaves are in their autumn colors. It's kind of beautiful. We're going to have a weather change this week, and it's supposed to get cooler, but the last few days have been in the 70s. We got into the upper 70s 2 days ago, so we're experiencing, I guess you wouldn't call it an Indian summer yet because we're not into winter, but we've had some beautiful weather the last few days.
God, so. I remember that term from when I was a kid. No one uses that out here in Phoenix because it's mostly just hot all the time. But I remember that Indian summer, and that would be when just basically summer lingers on for like an extra month, couple weeks, a month, something like that?
That or the temperatures get substantially higher. Like if we're in January and we get a week of 60 or 70 degrees, they'd call that an Indian summer because you're in the dead of cold, but then you still get those warm temperatures. So
interesting.
But you just had some earthquakes, if I'm not mistaken, in the last
and
few days.
and we never got around to talking about that. Let me pull up the latest. Let me just type in Phoenix earthquake. Yeah, now my wife was aware of it. She said, "What was that noise?" And I'm like, "I didn't hear anything." And
that's a typical male response to Wayne.
Yeah. Arizona earthquakes, 3 strike Phoenix area, several other areas shaken. All right.
Well, if I'm not mistaken, one of them was a 4.3 or something. I mean, it wasn't like a little shake. It was a pretty good one.
A series of minor earthquakes jolted the Phoenix area Sunday night, sending shockwaves through several cities. All 3 took place near Black Canyon City, Arizona, about 45 miles north of Phoenix. The first was a magnitude 3.2 at 10:59 Eastern. The second was a 4.1.
Yeah, I thought you had a 4 something.
And then the third was a 4.0. Several cities in the area felt shaking. Ground, walls, and beds shook here in South Scottsdale twice. Deborah Grossclothes tweeted. And that's about it. That's the same news I saw the other day. Nobody making too much of it. I don't recall us having an earthquake in Phoenix in the past. I mean, I guess they have happened here, but we're not on any major fault lines. The thing I've always heard is that, you want to buy property in Arizona because someday it'll be beachfront property.
Sure, when California falls in the ocean.
Yeah, I got beachfront property in Arizona, however that song goes.
Something like that. Oceanfront property in Arizona.
Oceanfront property, there you go. Yeah, so did you do any trading today?
I did do some trading, and I actually did 3 trades today. 2 in Crude and 1 in the Russell, and I netted 30 ticks in a matter of minutes and called it a day. And I watched the markets and listened to Michael and just enjoyed a nice, quiet day today.
Yeah. So, Did you want to go over your charts with us, or?
I can. I can show you my trades, and I can go through some of the other trades. Now, I've done some different things on the charts, so we'll go through those and see if it generates some interest or some questions.
Okay. There you go.
What do you see? Anything yet?
Not yet. Bob asked, on the earthquake, any fracking going on in the area, 500-mile radius? Not that I'm aware of, Bob. I don't think there's any fracking in Arizona. If there is, there's not much talk about it. So,
here in Missouri, we live on the new Madrid fault, and they claim that one day it's going to swallow us all up, but who knows? But in 2004, we had a pretty good shaking. And on the front of my house, I have a brick house. On the front of it, I've got a crack right above my garage where in 2004 we got a little shaking and cracked my brick line. So one of these days I'll get around to repairing it. But, you kind of forget about those things. And when it's not leaking or doing anything catastrophic, you just leave it alone. So, all right. So do you see charts or what do you got?
No, it's just the in-between picture.
That beautiful picture of you on the left with that mullet.
That's me. Yeah, so it didn't pop up. I sent it to you. Let me try sending it to you again. Hang on.
Okay.
Okay, let's try that again. It says presenter Jim Whitebar Cox. But you don't have, it didn't, oh, there we go. Got charts. Okay. It worked.
All right, you see 5 charts or do you see two charts? Which screen is up?
1, 2, 3, 4, 5.
All right, let's just kind of go through these one by one, and then the last 2 I show will be my charts that I traded on today. This is the bonds, soybeans, gold, euro, and the ES. We'll start over here with bonds. On the bond chart. Now, what I've done on bonds, I've gone to a 5-tick range.
Okay.
Because we've had so little follow-through in the last week or so, I've bumped my charts up. Bonds, I've gone to 5-tick range. Everything else, I've gone to a 6-tick range.
Okay.
And we'll talk about that in a few minutes. But on the bonds today, we had 2 bars offered, 2 white bars. The first one was an up close. It offered 8 before we got a pullback, and that was at 9:03 this morning. The next one was a down close at 9:38, and that offered 11 ticks before you got a pullback there. So that was 19 ticks on 2 white bar offerings on the bond market today.
And that's 31.25 per tick.
31.25 per tick, and it's a 5-tick range that we're looking at here on my charts. I've bleached everything out. I've just made the bars black so the white transition bars show up better. It seems to stand out more. So when I'm trading, they really kind of bounce into your eye when they show.
No, I
themselves.
like that. I think that's good. It does stand out. Now, you've gone to a 5-tick range. Are you using a 5-tick stop with bonds?
I am using a 10-tick stop.
10-tick. Okay.
10-tick stop, but everything else I'm still following the same way. 4 ticks of profit, I'm going to break even, and then as it closes beyond the black step line, I'm following with the close of each bar.
Okay.
Okay, let's look at the soybeans now. Soybeans had a couple of white bars present themselves. The first one was at 8:45 this morning, and that would have been a break-even trade. The next one, single white bar, came in at 10:13. Oh, see, now this is my favorite. I love these kind. See that little? That's a hammer. I'm guessing that's what you call that thing.
That's it.
Closed up, and then offered 19 before the pullback. So the hammers and the hangmen, or whatever else you want to call them, those do work out rather well. So 19 ticks offered on soy, and that's a 6-tick range. You can see it up in the left-hand corner here.
It's also right there, right in the crook of where you got your bullish cross. Got bullish cross there. I mean, I understand that you don't. That's not a part of your white bar trade, but when you've got it staring at you and you see that whether you're using that to enter a trade or not, it can certainly give you some confidence once you're in a trade.
Well, it's also right at the concierge level, so that's your entry point on a long concierge. It's a bullish cross. It's a white bar, so that one there's screaming, buy me, buy me, buy me.
And your cycle down on the slingshot is blue and climbing. So yeah, about all you could ask for.
Yep, you got your black step line above your BBC. So I mean, it's a good trade all around. All right, let's go to the gold market. Oh, where are we at on gold? Let's roll back to the beginning of the trading day at 8:30. Over here, nothing showing up. There we go. All right, so now gold didn't offer a lot of white bars, and again, we're on a 6-tick range, and it limits your white bars, but the ones that you do get seem to work really well. I've been doing this for a week now with the 6-tick range as opposed to the 4-tick, and I have not had a single 8-tick stop out. Double white bar here, double here. Okay, this white bar was at 10:25 today. It closed up, and it offered 8 before the pullback. The next white bar here closes down, but then you have a white bar immediately. Closed up. Then you immediately have a white bar closing down. So you would have dumped that trade with probably a 3 or 4-tick loss. So you're still positive 4 ticks from your first trade. Then the next one is your big move, and that one was right at where are we at here on time? 11:09, closed down, and it offered 17 before you get the pullback in this area here. If you would have stayed in that trade, it offered, oh gosh, those are six ticks each. So was it 1, 2, 3, 4, 5,
the Concierge
6?
Trade Alert offered it was over 1,000. I had it pulled up earlier.
Here's the short level at 11:15.
Yeah, and it went down to 11:05. So that's $1,000 per contract.
Now, following the concierge, we'll talk about that while we got this pulled up. You would have sold here at 11:15.4, and would you have done anything on this pullback here, or would you have just
if people are using that just to get their points for the day, you know, it's. I mean, on that pullback there, it would again depend upon your risk tolerance. If you're looking for a bigger move, if you're trying to take $1,000 out of the market or some bigger number, then your stop would actually be, back above that swing high up there.
Over here.
Yeah, like above those red dots. Where you've got, that's your stop would be way up there. And so then that little pullback there would just be, because we know that the market leg, retrace, leg, retrace, leg, retrace. Now, price would have probably, if price had come back above those green, see that broken support, price pulled
Here.
right back up to the green dots and support became resistance, okay? Had price continued higher above that, I would probably think that someone would want to consider getting out of that position. I don't know. It really depends upon what your goal is. I mean, if you're just looking to get your points for the day, then from 11.15.5 to 11.14.5, you're done. And
Well, you could have put your stop at 11.14.5 and just left it sit there, because if it took you out, you still got your 10 points. But then if you stayed in it,
that's right.
you could have picked up all the rest of this.
Well said. Yep. Guys, listen up. That's good advice.
Okay, so that's what we had as far as white bars on gold today. So let's close that one. Go on to the euro. Euro had a bunch of gold or white bars today. So
Oh, there's a question from Bob. Are you using a 10-tick stop on gold as well?
I am.
Okay.
Everything that I'm doing now is a 10-tick stop, break even at 4 ticks, and follow it either behind the black step line or as it closes beyond the MA, the CFMA1.
Gotcha.
All right, so let's see, 8:30 there. Let's get to the market opening here. Here's 8:30. Oh, look at that one. The very first one is one of my favorites. We got the hangman with the little head hanging down there.
No.
So you would have been short
No,
at
that's
901.
that's a shooting star. It's got to be
Shooting
flipped.
star.
It's got to be flipped the other way.
All right, you know what?
Box is see, it's a hammer after a downtrend, it's a hammer. After an uptrend, which is what you've got right there, price climbed up.
Okay.
Then see right there, if that were flipped,
So this
down
one down
there
here at
is
the
a
bottom?
hammer. Yeah,
That's
that's
a hammer.
And
That's a hammer.
up top
That's
it's
a shooting star.
Yep, there you go.
All right, you know what? I'm going to mark these because I am not going to keep calling them the wrong thing.
There is a, let me see if it comes up. I think if you Google the secret life
Of the white bar trade?
of candles,
Gotcha.
secret life of candles. Yeah, the second result down, the secret life of candles. It's a slide share, and it's just something I put up some time back in 2013, I guess it was. And it will walk you through those different candles.
Candle names?
Mm-hmm.
Okay.
Yeah, it's like there's 22 slides, in the deck. The Doji, the gravestone. Let me get to the one that we were just talking about. One of the most visually compelling signs signals is the hammer signal. The hammer signal is easily recognized by the lower shadow or the tail protruding to the downside after an extended downward move. The hanging man produces some very important attributes when analyzing a potential reversal. It is considered one of the 12 major signals. Learn how to use a hanging man signal correctly. The probabilities of being correct in a trade when utilizing this signal becomes extremely high. And that's just price goes up, and then you get that. It looks after a downtrend, it's called a hammer, and after an uptrend, the exact same candle is called a hanging man. And they're both powerful signals. They both also call for a confirmation candle afterwards. Now, that's where sometimes people jump the gun with candlestick signals, is not realizing that sometimes it's a 2-candle pattern, and in some cases even a 3-candle pattern. And so you want to let the whole thing develop. Now, in letting the whole thing develop, sometimes you will, miss out on some of the profit that's in there, but you have a little bit greater conviction in the trade itself. So, Steve Bigelow's book, High Profit Candlestick Patterns. He was going to send me his new book. I don't think he ever did. That's the one I read till the pages fell out. It's about 40, 50 bucks. It's about 40 or 50 bucks on his site, which is Candlestick Forum, and I think it's money well spent. After you buy Trading in the Zone, or get it free from me, you should then go get that book, I think. And there's only 12 major signals. There's like 200 signals altogether, but he focuses in that book and on his site on just the 12 major signals.
Mm-hmm.
So
gotcha. Okay, well, let's get back to it then. Okay, so we've got a shooting star here at 849, and that offers you 6, 12, 18, 20, 26, and 5, 31 ticks on that move before you get a pullback. So if you're looking for 10 ticks a day, you've got it all in one move on the euro, and you shut your computer down, go have breakfast with your wife, and it's a good day. Next one is a white bar at 9 o'clock, and it closes down. It offers 12 ticks before you get a pullback. Next white bar closes down, offers 8 ticks before it pulls back. Next white bar closes up, and this is at 9 o'clock also. That one offers 6. Next one closes up, offers 5, it comes back, so it's probably out of break even on that one. If you just stayed in it, you could have locked in 4 or 5 ticks on it, but it's probably a break even trade. Then we get a double white bar that we don't trade. Next single white bar comes in at 9:57, closes down, and look at that, it's another one of those shooting stars. Shooting star offers 6.
The longer the tail, the more important the signal, so they say.
All right. Well, it offers 6.
Keep in mind now we are working in the grand scheme of things. We're working in a relatively small time frame, even though you've bumped it up to 10 ticks. Most chartists will look at these types of things on a daily chart, sometimes an hourly, and so we're really kind of pushing the envelope when we work them. But because the markets are fractal in nature, they do bear out, all the way down to a 1-minute chart. So you just don't but it's all relative. If you get that kind of a signal on a daily chart, the movement you get after it will be relative compared to what you might get after you get that same signal on a 1-minute chart. So, okay, go ahead.
Okay, the next one is right here at 1041. It closes up. It goes 5 ticks in favor of the trade, then comes back, goes 5 ticks away from it, then goes 6, 7 ticks in favor. This is probably a break even or +1, because once you get your 4 ticks, you're going to move to break even on that trade. Next white bar the black bar past the white closes down. Then the immediate bar following that, I correct that, closes up. Then the immediate bar closes down, so you're going to dump that trade and probably have a 4, 5, or 6 tick loss, depending on how quickly you get out of it. And then the next one that closes down offers 8. So of all the trades on Euro today, you had a break even, a -5, everything else was positive. So there you go. And if you catch that first trade, you're done for the day. All right, so let's get out of there. Let's go to the ES. ES 8:30 this morning. Market opens. Looks like it opens up in a zone. Now it opened above the zone. Pull this down a little bit.
Yeah, we had off the Concierge Alert last night. We had some very nice moves to the upside. I think there was 3 of them, and they moved a good distance. But it was a little unusual this morning because we had the holdover of Draghi speaking at 4 a.m. Eastern, saying that they're going to potentially increase their quantitative easing, and then come right along, at like 8 or whatever time it was that Janet Yellen starts speaking, saying quite the opposite, that probably next month we'll start raising our interest rates. So I think the S&P was a little confused which direction it wanted to go, but it created nice opportunities in both directions.
Sure. Well, on the Concierge, the first one was here at 2:39. Well, actually, I guess we go back further because you put those out earlier than that.
Yeah, they were out at 7:15 Eastern last night.
So 7:15 would have been here. So the first one closes up. And this one was 7:50, just 10 minutes before 8 o'clock my time. And that one ran up 4, 7, 11, 12 ticks, 12, 13, 15 ticks actually. 15, came back, reset itself, does it again over here at 2:47 my time. I'm sorry, 2:39 my time. Closes up, offers 5, 8, 4 more, offers 12 ticks on that one. Comes back and resets again. Next one is a break even or a +1. Resets again. This one runs up. Well, this is probably the best one here. So we go up 5, 9, 10, 12, 15, 18, 20 ticks on that one. Sets a high of the day then.
Yeah, that was a nice morning for anyone that was trading the alerts on the S&P on the upside. And then we had
the only bad one. Yeah, the only bad one came right here at 9:30, and that would have stopped you out there.
Yeah, it would.
All right, so looking at the white bars, we got a double white bar there, double there. Our first single doesn't come until 9:30. Closes up, and it offers 10. Next is a double. Next one closed down. Now this one here, it offers 12. It gives a pullback into the zone. You might have stayed with this one to see if the zone was going to hold or not, and then it falls pretty hard. But minimum, you would have got probably 12 ticks out of that one. So those two trades there, they net you 22 ticks. The next single white bar closes down, goes 4 ticks, and then changes direction, so that's a break-even trade. Next one closes down, goes 4. You could have gone to break-even, or if you stayed with it, it offered you 6 ticks on it. Next one closes up, goes down, closes up. Now this would have been a break-even because you would have gone to break-even when this bar closed above the MA1 here. So that's a break-even trade. Next one closes up, and this is at right at 11 o'clock. This one offers 18. So you can see all the trades in the ES today, no stop-outs. Beautiful day, no stop-outs. All right.
That's nice. Yeah.
That is nice. All right, now let me bring over Crude. These are my trades. I took 3 trades today. I'll show you the 3 trades that I took. Let's open that up. This is pre-market. I traded early this morning trying to get my points and be done for the day. I had a white bar that closed down at 7:43 Central Time. Closed down, offered 5 ticks. I was able to bank 4 of those ticks there. And the next one was also pre-market. Was it? No, this is at 9 o'clock. I'm sorry, 8 o'clock, so it is pre-market, 8:08. And this one closes down and runs a nice 18 ticks for me. So 2 trades, 22 ticks before the market's even open today. Now look at this right when the market's open. Look at this nice move here. Single white bar, there's a shooting star. There's the boom. Shooting star down. I'll just kind of run through.
And guys, watch this. Look at see right there where he shows you the shooting star. Then price gets underneath the CFMA1, red and falling. The cycle is red and falling. I mean, that's just when that comes together. Gosh, it just that's as good as it gets. I mean.
Well, and I was done trading. I had 22 ticks. I had no desire to do any more trading, so I'm just kind of watching as things go. But I was too tempted on the Russell, and I'll show you that one in a minute. So this one worked out here. This down close here. This is a break-even trade. It moves 5 ticks. Then you get an up close. Whether you take it or not, it depends. It's a white bar closing up against this trade, so that's why you'd be out of the first trade. This trade would have pulled back 6, 7, 8, 9, and then change direction. So with my 10 tick stop, I would have still been in this one going up. Probably a break even. I'd have got scared when all this mess started happening here with the resistance and the Concierge short level here. So I'd have dumped that break even. This one closes up here, and it offers 5, and then a white bar closes down. So this is a break even trade also. This one closes up. Now, depending on what you're trading, this closes up, you've got resistance, you've also got a significant level, which is the Concierge short level, so I probably wouldn't have taken that. The cycle's buried up as high as it's going to go, so even though it did move up, I wouldn't have taken this trade. Double white bar here, double here, skip all those, double here, Okay, look at this. Here's a boom. This is a kaboom here. All right, we get a white bar, and this is at 9:34. Okay, now realistically, I wouldn't have traded this because we're still in the mix from the inventory trades. So you do have a white bar there, but I wouldn't have done anything with it.
Yeah. Again, guys, we always say this, but I'll say it again. I know that Michael trades with some of you guys the inventory release. He didn't today because he was busy sending out those other trades. But if you're not experienced with news, and you really should just step aside. And with the crude inventories, 15 minutes is usually enough time for the market to settle down. Something like a Fed announcement, give it at least 30 minutes to settle down, because that's a big event. And again, if you're not experienced trading news, because it's one thing to hear the news and go, oh, that's good news, I'm going to buy the market because it'll go higher. Or with crude inventories, oh, the numbers came in, the inventory numbers is smaller than expected, so I'm just going to buy. If it were that simple, wow, everybody would do it. But it's not. Just because you get a bullish or bearish piece of news doesn't mean the market is going to respond accordingly. Sometimes it does, sometimes it doesn't. Sometimes it runs both ways. Just enough, to stop you out on your short side and stop you out on your long side, and then it goes on about its merry business. So, anyway, I'm with you. So I'm not trading on the number. Yeah.
We get out of the inventory trades, and once we get out of it, we failed to put a lower swing in here. So I drew this box in place because price got hung up here. So until we get out of this area, I wasn't going long or short, especially after an inventory trade. Yeah. But look at all the white bars, all the transition bars that show up. So wait for the market to get back into some kind of normal sinus rhythm. So now we've closed below it, so look for white bars past this point. Okay.
And guys, remember that the white bars, in their original context, as they were coded into that indicator, the white bar was a potential change of trend. It wasn't a change of trend. It stood for potential change of trend. That was the original. If you go back and watch some of the early videos, very, very explicit about that. It says there's going to be a potential change of trend. And so when you get a whole bunch of white bars showing up like that, like what Jim just showed you in that little choppy area, that's when you'll get just chopped to bits. And when you see that, just get out, get flat, go look at a different market. Wait until there is, now this is after the fact. We're looking at a historic chart. It's easy to be a genius with a historic chart, but the more you study these historic charts, the better you'll be able to understand what's happening in real time. Okay.
And looking at this chart, you can see we've got this area here. You get a close below the area here, you get a pullback. You've had your cross here, pulls back and touches the BBC. You could actually go short here, or if you waited till the next one to go short just for confirmation, you get a nice run down. If we'd have drawn a trend line on that, let's see where our trend line would have come. So yeah, you'd have been short here at 46.97 because you've got a close below your box. This is a close below it. So 46.97, and then look how far it runs. So following Michael's philosophy, and this is actually, yeah, everything's turning down. You've got a red cycle. This is a good trade here. Nice move. All right, so then that takes us up to 10:30. We have one more white bar before 10:30 closes up, and unfortunately that would have been your 8 or 10 tick stop out there. Even if you dumped it at this point, at this white bar here, you probably would have still lost 10 ticks on that trade. So that takes care of crude. And then let me bring the Russell over, and we'll go through that one and see if anybody has any questions.
Okay.
All right, and this is the Russell today. And this was my one Russell trade. Here's my favorite thing. There's another shooting star there after a white bar. I just can't seem to resist those for whatever reason. So I locked in another 8 ticks there. 18 and 4, 22, so 30 ticks today on 3 trades. That was my only other trade, was on the Russell. But let's take a look at the Russell and see what it did. All right, so no white bar. We've got a concierge level here at 1189. So you'd have made some money on the concierge trades. Then it falls down. Single white bar here. This is at 8.56. This one closes up. And it takes you back 7 ticks, goes up. You get a close above the MA1, you could probably go to break even on that and dump that trade, be out of it, break even. Get a double white bar that comes up so you don't trade that. This one closes up at 1187.2, and then it runs up nicely. Back up above the concierge level. Get a pullback, close up, go long at 88.8, that is 6. That is an 8-tick, I'm sorry, that's a 10-tick stop out on that trade. It does pull back and take you out of the trade. Next one closes down with a white bar that closes up immediately, so you dump that trade, and that's going to be 2, 4. That's a 5-tick loss. So those 2 trades there, you've lost 15 ticks. So you're hoping that you made it all up in this trade over here. Let's see what we get as we go on here. This one is at 928, closes up, runs up 5 more. It's 10 ticks offered there. Doji, we don't follow, we don't trade a doji. Double white bar, single white bar here. This one closes up. And then it pulls back and closes down. That's going to be a stop. You're going to lose 10 ticks on that one. There's a shooting star closing down, but it's in the wrong position. So, let's see. Double white bar. This one closes up. You're in a zone. Next one closes down, so you're going to dump that trade. 3-tick loss on that. So the last 4 white bars were losers on Russell. And then we're up to 1023. Closes up. That's a break-even trade. 1026 closes up. That's going to be a dump trade there. And then we're to the 1030 mark, so we don't trade past that. So you would have had to make your points early on the Russell today because the last 4 trades, last 4 were losers, and the last one was a break-even. But you would have made well over your 10 points before we ever got to that. So that takes care of all the markets, all 7 markets today.
Did have a question? Yeah, I've got a question here from a couple. Let's see. Iris asks, on the trade at 839 on the euro, the 6E. So you want to pull that one up? Yeah, 839 on the 6E with the single white candle, and then the next 2 candles are white. What are you thinking at that time? Is this unusual?
The double candles here, they both close in the direction of the trade, so I'm excited about it. I get the shooting star, I get a close going down, another close going down, another close going down, so it just confirms that this is a good trade. Once you're into your trade, a single white candle starts a new trade, but as long as that trade's going in favor of your original trade, there's no point in dumping it. Run with it and see where it goes.
Okay. All right, and then Josh asks, did I miss something on why you use a 6-tick bar, or has it always been that way? He explained, I think, did you say you've gone to 10?
I went to the 6-tick range bar last week because the markets had so little follow-through. And if we, you know what, let's leave all of our numbers in place. Let's click this over to a 4-tick range and see what happens with the chart. So let's go back. Okay, so we've lost a shooting star. We've got a white bar here that closed in direction. This one closed up. That's a stop out. Now you dump it, but still you're going to lose 7 ticks on that one. This one closed up and then went down, then eventually climbed up. So you can see you're not getting nearly the follow through on these trades that we did on with a 4-tick that we got with the 6-tick range. It's presented a couple of additional trades, but you get a lot more consolidation. Get this area here. And in talking with Michael, when I explained what I was doing, he said, yeah, you would see a lot more of that when the markets aren't given follow-through to go to a larger time frame. So that's what I did, and it seems to be working rather well for me.
Tonelli asks, Jim, why did you start looking for something different than what Mike is trading or the partner trades?
Well, and that's kind of the whole thing here, what I did with the white bars. You know, we never had the white bar trades until I brought the TC indicators back up and started playing with it. I think as as you get more proficient in the market, as you look for patterns and you start watching markets and charting your trades, you'll start seeing different patterns. And I saw the pattern with the white bar, and that's why I brought the white bar in. So now that I have the white bars, I look for better ways to trade it, more profitable ways to trade it, trying to limit as many stop outs as I can. Like in looking at just this picture I have on the screen, you can see this is the euro. This was the entire trading from 8:30 to 12:30. There was only one trade you dumped for a 5-tick loss, but if you took all of these trades, you've got 12, 20, 26, 32, 40, 41, not even counting this one. This was 20 ticks here. There's 60 ticks offered right there. So in just trying to perfect something that we've already identified as a possible trade setup, white bar trade setup, I'm just trying to find a way when the markets are not giving follow-through to get to a better, better profitable trade setup. And that's why I'm at the 6-tick range now.
And it's also how the other partner trades came to be, because most traders at heart are tinkerers. And so when you have a set of tools at your disposal, they're kind of like Lego building blocks. You can assemble them in a lot of different ways. And when you assemble something in a way that is uniquely yours, it can be the slightest little twist or flourish that you put on it that puts your DNA in it. Now suddenly you own that thing. You understand that like no one else. You can't go ask anyone a question about it really, because you're the creator. Now you're the developer. Yes, you used our tools, but you assembled it in a different fashion, wrote a set of rules for it, and that really is a breakthrough moment for many, many traders. They can do okay with other stuff, but it's when they come across that one thing, and it can be, with each partner trade, each one of the partner trades evolved out of something that some partner brought to a partner workshop and said, hey, I've been looking at this. And so we gave them names. We started naming them after. We had one trade named after somebody. I think it was George. We had the George trade. And then we had all the different workshop numbers, the 137s and whatever else there are, and the inverted 137s. Then we had the white bar. And so it's something in all of us. Now, the thing you got to be careful with is when Jim's done a real good job with what he's done with the white bar. When you have an edge in the market, be careful that you don't try to put an edge on an edge. I mean, you can take it to a higher level and then to a higher level, but you reach a point where the edge will actually start to diminish. So as you're building, as you're being creative, inventive, always keep that in mind. Watch for that point of diminishing returns and recognize it when you hit it, because now it's time to back up a step. Okay? If you got something that's really good and working for you, once it is as good as it's going to get, let it be. Okay? Mm-hmm. I've seen traders turn perfectly good things they developed into worthless hunks of nothing. I'm like, man, all right, okay, back. You know how our computer, how we can, what do they call that when we take it back in time? What's that called? Restore.
Right. Yeah. System restore.
Yeah, system restore. Okay, you need to go to your little methodology or strategy that you created. You hit system restore. Go back 2 weeks when you were doing really good, before you put that other thing in there or added this other rule or stood on your head when you made the trade or whatever it was.
And one thing I do before I go to any kind of live trading, I traded for 4 days, actually 5 days, with a 6-tick range on Sim, and I have pages and pages of trades and notes and everything else just to kind of verify it was going to work before I do it, because I won't do anything live trading until I can test it for a pretty significant amount of time on Sim trading.
Yeah, absolutely. And, never, guys, you gotta prove it out in Sim first. Mike Ars, I think he was suggesting that he likes an 8-tick range. Mm-hmm. And then, let's see.
I think I'm a little bit ADD, and I don't know if I'd have the patience for an 8-tick range. It's hard enough on the 6-tick waiting for the white bars to come around.
Josh says, to follow up, do you still use an 8-tick stop?
No.
You use a 10 tick, right?
Correct. I use a 10 tick stop.
But you still go to break even at 4.
That is correct.
Where can I find instructions for installing the white bars? Howard, I'm pretty sure you've asked that question before, and I think Michael, didn't he give you a video? Point
Workshop
you to a video?
207 is where we first talk about it.
Okay, there you go. Workshop 207, Howard. That'll fix you. Workshop 207. 207. Josh says, I've been trading live 4-tick white bars for almost a week live. Would you recommend I pull back into sim and try the 6-tick range? Well, I don't know, Josh. Are you profitable?
I've been communicating with Josh, and I think he has been hitting his 10 ticks.
He says, of course. Smiley face. Well, okay, now here we go. I mean, you got something that's working and is profitable, and that's that human nature coming out to play. Well, okay, this is good. Let me tinker with it. So I don't want to answer that question for you. You can, Jim, if you want to.
I guess the only thing I would say, Josh, is that, like we've discussed before in several different emails and on the radio and in the Partners Workshop, the market has a personality that changes, just like a human personality changes over time. When you see the market and you've been in the market for a couple of years, you'll see the swings of there are times you can look at the market and say, wow, that was easy to trade. Everything did exactly what it was supposed to do. It followed through. And then there's times where the market gets a little bit slower or it doesn't have follow through. I went to the 6-tick range chart or range bars because the market to me in the last week has had limited follow through. I was getting a lot of trades that were getting 1 and 2 and break even, where before that I was able to pick up 5, 6, 8 ticks on a trade. So by going to the 6-tick range chart, I'm seeing better follow through. For example, today I had 3 trades and 30 ticks. Now, last week I had 26 trades in one day, and it took me that many trades just to get to my 2 points. So that's why I made an adjustment based on what the market was doing. Now, if we get to a point where the market
not just for the purpose of changing.
Correct. Okay. When the market gets back to a point where it was maybe 6 weeks ago, where the 4-tick was given plenty of follow through, I may go back to the 4-tick range chart. The 6-tick may not be following through as well. So I'm making adjustments based on what the market's doing, trying to stay consistent with getting my points and getting out of the market as easily as I can. It's very frustrating when you've got 26 trades and you only made 12 ticks. So, and because you get eaten up in your fees.
Right. Yeah.
So that's why I did this. So I wouldn't recommend you change. If you're getting your 10 ticks and you're getting it in 10 trades or less and you're being profitable on a consistent basis, I wouldn't trade. I mean, I wouldn't go to a 6-tick range. If you do, please do it in sim before you go to live to make sure that it's going to work for you.
Amen. Tonelli asks, were you consistent before you found the white bar trade?
Yes, but I felt like I was fighting the market on a daily basis. It seemed to me like I was having a lot of trades and I was getting consistent, but it just felt like it was a constant battle.
An uphill struggle instead of a flow. Okay.
Right. I didn't feel like, and if you've read the book by Mark Douglas, In the Zone, it didn't feel like I was in the zone. I didn't feel like everything was flowing and I could pick the good trades, and it felt like it was a struggle on every trade. Yeah. Then when I started playing with the white bar, I felt more comfortable, and then when I got to the point I'm at now, it's like, it's like second nature. I see a white bar, I look at my cycle, I look at where the lines are going, and I put my orders on and I wait for it to happen.
And would you say that you have a carefree state of mind?
Yeah, I think so. Because even
that's a tough one. I know. I mean,
yeah. Well, it's carefree until you get 3 or 4 stop outs in a row. Then it's like, what am I doing?
Yeah.
So then you think, oh gosh, and there is, and Dwayne and I have
Casey,
talked about
he just showed his chart for the last 30, 45 minutes. I guess you missed it.
Which one did you want me to show a chart again?
Oh, he's got his chart up right now. Casey, I'm not sure what you're asking. That's Jim's chart up now. He's been showing I forgot, you still have the charts. Yeah. What I was going to say is Dwayne and I have talked about this several times in the past. There is no holy grail trade. There is no trade out there that's going to win 10 ticks every time with never getting a stop out.
There's no trade that's going to win every time. You're going to get stop outs. You're going to have days where you have stop outs. And looking back on my spreadsheet, I've got, and this is just 1, 2, 3, 4, 5, 6, 7, 8. This is 8 days, and in those 8 days, I've got 7 profitable days. I've got 1 day where I got my points and gave them all back, and I've got 1 day where I was down. So, like David was saying earlier, you have to believe in your trade philosophy, your methodology, and you have to understand what your trade setup is. And you have to realize there's going to be good days and there's going to be days that aren't as good. The aren't good days are going to be your expense days. That's where, if you're a butcher, you're buying your meat. So when you've got a day where you've lost a few $100s, just look at it as part of your expense, as part of being in business. No business is expense free. Every business has expenses, so that's your expense day. As long as you, over the long haul, over the course of all your trades, you're more profitable than you are not profitable.
Yeah.
So.
Now,
Anyway,
Casey,
that's my show, and that's the end of the day, wherever David's.
That's my show. Good night. Now, Casey
there we
logged
go.
out because he said, "Oh, I logged in, and all I see are Michael's charts from the trading room. I'll try to re-log in." I think because you've got yours sectioned
Set up
out
similar to Michael's.
similar to Michael's. I think he thought he was seeing the trades left over from the trading room. So,
I got you.
wow, that's too bad because he's logged out. And Michael O says, Jim, thanks for your honesty. We really strive for that here. We try to be as transparent as possible on all levels because, man, there's so many thugs between here and Wall Street, and daily you can get mugged out there, aside from the trading part. But it's all the people along the way, the pickpockets and the guys in the, on the side streets and the alleys going, hey, come here. They open up their coat and they go, look at this indicator. Look at look at this oscillator. Never get stopped out again.
Well, and we talked about this in the last couple of weeks. I think everybody's aware that I had a catastrophic loss. I had an electronic failure from my end with my computer and the way things were working, and almost wiped out an account, which I haven't done since I became a CFRN member. Because I was profitable, I was able to build up a nice account. I didn't want to tap into the savings and what I've already banked, so I'm rebuilding again. I
got a lot of respect for your ability to take that in stride and to just begin the rebuilding process. And yeah, not much else I can say.
Well, and that was, I'm looking back at my notes here.
Casey, you're back. Those are not Michael's charts. Those are Jim's charts that you're looking at.
Hi, Casey.
See those move your cursor around, Jim. See that cursor moving around? Those are Jim's charts.
Does he want to look at a particular chart?
He's got them set up like Michael's. Was there some particular chart? Yeah, no, it's no problem. We figured out that because he has them set up the way he does, that you just naturally assumed that they were Michael's. But no, those are actually Jim's. Was there any one particular chart, Casey, that you wanted to see?
Michael doesn't have her behind the charts, does he?
No, he doesn't.
That's my lovely bride, everybody.
But she is lovely. Isn't she lovely?
Yes.
Was there a particular chart you wanted to see, Casey? Because Jim said he's willing to show it to you. Otherwise, we're going to wrap this show up. Call it a day. The TF, the Russell.
And I was gonna say I started over, back down to 2 contracts, and I'm on pace. Next Monday, I'll be able to go to 3. I'm doing the rebuilding process again.
Man, that's going to make a great chapter in the book.
Yep.
All right. The TF. Could you show Casey the TF real quick, and then we'll the Russell. You don't know it as the TF because of this platform, but it used to be called the ER2. That was before it moved to the ICE exchange, and so now some platforms call it RLM, and others call it TF.
Okay, this is the Russell, and this is basically from 10:30 to current time here. So.
And you can go back. You can go back once I upload the radio show to the Google Plus page, Casey, and you can see Jim go through every one of his charts and every one of his trades and all the trades that he took and the ones that he just sat and watched go by because he already had his points for the day. And so I'll have that uploaded in a couple hours. Okay.
I was going to throw this out there.
Yes.
Several CFN partners, try to get together and share things. This particular weekend, Saturday, another CFN partner, Jeff Gilbert, He's in the Kansas City area. He and I are going to get together with a couple other guys from CFRN and just kind of talk about strategies and trading. If anybody would like to join in that meeting, just send me an email and I'll give you the location and the time. But it'll be this Saturday somewhere in Kansas City.
You guys are going to physically meet?
Yeah, we're going to physically meet.
Cool. Oh, that's neat.
Yeah.
That's really neat.
He's driving up from Springfield. We've got a couple guys in Kansas City that were at one of Michael's seminars. I believe they're going to join us. So if anybody is interested and wants to make a road trip and sit and chat, I'll be more than happy to invite you and let you know where we're going to be. No
Alex,
cost to that either.
Yeah, well, that's really. I'm really glad that you guys are going to be able to get together. Alex, the green and red lines that you're referring to, that's the CFRN indicator set. That's exactly what you see us using in the live trading room every day, Monday through Friday, for the last 3-4 years.
Unless he's talking about these significant levels.
Horizontal? Oh, those are swing. One's the...
those are concierge.
Those are the concierge trade alerts, the high and the low.
Yes.
And then the dotted line is the low of the day. And
the dotted line is the low
high
of the day. Low of the day is the dotted on the bottom. And let's see, up on top, that's the high of the day. And the dots are support and resistance. And this is the weekly trading zone here.
Got it, Alex? Okay. Well, Jim, thank you so much. I appreciate it, my friend. I really look forward to Wednesdays and having a little time to hang out with you. And I wish I didn't live so far away so that I could come to you guys' get-together this weekend, but I won't be able to make it. So.
That's okay. We'll have to do one in the Phoenix area.
Yeah.
When it gets a little...
Oh, I'm sorry. I cut your mic off. I didn't mean to do that. I was just trying to get the charts back. Hoist one for me, Cup of Joe, whatever you guys are doing. But have fun, have fun.
Sounds good.
We spend so much time in front of these charts to get out and get some human interaction. What in the world happened to my charts? Let me see here. 641. Hang on. Okay, let's try that again. All right. After looking at your charts, is there any importance to the red-blue line relative to the zero line? You're talking about the cycle down at the bottom, Casey? That's what you'll see every morning in the live trading room. The cycle indicator is part of the CFRN indicator set. When up top you have the CFMA1 red and falling, and the cycle down below in the slingshot is red and falling, that's a great place to be short the market. And when the CFMA1 is blue and climbing, and the cycle down below in the slingshot is blue and climbing, that's a good place to be long the market. So you should come take a free trial if you haven't, and you can see that in action Monday through Friday from 9:30 a.m. to 11:30 a.m. Eastern. And Jim, I probably won't talk to you before the weekend, but I can't wait till next week to hear how it went.
Sounds good, and I'll take good notes and share it. And like I say, if anybody wants to make a road trip, just send me an email and I'll get you the location.
Guys, you can get a hold of Jim at CFRN.net. Shoot him an email. All right.
Sounds good, Dwayne. You have a good day. And
thank you, my friend, for everything.
I'll see you at the bell, as you like to close out your...
I'll see you at the bell, buddy. Take care.
All right, take care. Bye.
Now, guys, that's going to do it for me as well. I'm going to get on up and get out of here. We already covered the Concierge Trade Alerts. We covered the bonds. We covered the crude oil. We covered the euro. We covered... Oh, we did. The one market we didn't cover was soybeans. And, well, I'll stick that there. But on the soybeans, what did we say last night? Let's have a look. Soybeans, long above 882. So that's going to be right there, long above 882. Okay. Now the alerts went out at 1915. 882. So really what I need to do is I need to move that over here. And I need to move that, I guess, over there. And then I need to get this shrunk. Honey, I shrunk the line. Okay, and I need to get this back to today's the 4th. Gosh, I need to get all the way back to there. Is that no 1400, 2000? That's where I need to be. Is right there. Okay. That's when soybeans reopened last night on the 3rd. Today's the 4th. Okay. And so our get long, I got to get this pushed back to there. Actually, you'll notice on the alerts, let me show you. On soybeans, it says beans, same as last night. That's about, for some reason, that's the only market that happens frequently. Okay, so we didn't trigger on the short side, 878. We did trigger on the long side, 882, and we triggered fairly early on. And we used an 8-tick stop. So that means you'd have to get down to 880 to get stopped out, which is right. My horizontal line, that's 880. So this trigger and this back and forth, it takes forever, but it finally does give up the 2 points to 884. Then it comes back, important prices, important areas, it tests, and then it gives a real nice run up to 886, which is 4 cents, or the equivalent of 4 plus. This is 4 plus points equivalent in the S&P. So we covered that, covered the Dow, which this move gave 9. This move gave from 90 down to 56. So that would be 34. 34 points. You need 20. So these are points, not ticks. The Dow doesn't have any ticks. It's just 40 points, 39 points, 56 points, 9 points, 34 points. Okay? You need 20 because it pays $5 a point. And so 20 times 5 gives you $100 per contract per day. Here's the Russell. And, the Russell actually finally broke through that 82. It got down to 81.20. Okay, so that's going to be 8 ticks. On the first move down, it didn't break it. You go 1 tick below, it's actually going to be 7. 7 ticks. So it's enough to get your stop to break even. And that's about it. Okay, most everything. And it looks like it's ready to make just another run here on the upside. It's trying to. All right, and so back to the S&P. In fact, I'll bring up the big chart of the S&P. That one? Nope. That one. Yeah. The one that has the zones on it. Okay. Here, I'll open it up. I'll leave this running for a little bit. All right. So, how far did this drop? It dropped to 2090.50. So we ended up with 5.5, 5.5 points there. 5.5, okay. All right. Now it looks like it wants to. It's either going to trigger on the short side again, or it's going to try to climb Now, if it gets back above 2102, we're looking for some upside. All right, guys, thank you all so very much. Dwayne on the YM, when do you bring your stop to break even? It's kind of the same rule for everything, Gary. There's an 8-tick stop loss. Once you have 4 ticks profit, you move your stop to break even. Now, the Dow is a little unusual because you're risking 8 for 20. Instead of it being 8 for 8 or 8 for 10, it's 8 for 20. So some people do tweak the rule a little bit, okay? My suggestion is in sim, try to get profitable with the standard rules. If you find it's fortuitous for you to tweak them in some way, make sure that you tweak them in sim and show yourself some consistent profitability. But I mean, off the shelf, the rule stays the same. 8-tick hard stop, 4 ticks profit, go to break even. 5 ticks, lock in 1 tick, covers the commissions, and then trail. And with the Dow, it's often hard to get 20 points in one stretch. I find that often with the Dow, you take it in bites. Like you'll get 8 points locked in, you'll get 4 points locked in, you'll get 5 points locked in. Sometimes it'll take you 2, 3, 4 trades to get that 20. And then other days you'll just, boom, it will make the run for you. So, with that said, thanks for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
Trading Metro. Online trading the way you want it. Coming soon at tradingmetro.com.